get to the entire psyche of foreign investors towards emerging markets. Do you think 2017 is likely to remain that way, a long DM, short EM trade?
Yeah, I think there's a real shock coming in 2017, and that would relate to two factors. One is the strength of the dollar, which certainly up until last night was very strong indeed. And that is always difficult for emerging markets because they do manage their currencies against the dollar to all different degrees. Some do it very strictly and some do it only very marginally. But when a dollar is strong and you've got any form of management against that dollar, whether it's in a basket or a firm fix, then it does lead to tighter monetary policy domestically, and it does lead to difficulties, at least to difficulties for your domestic institutions that have borrowed United States dollars, and this could be the year of a very, very strong dollar. So that is a real challenge for the whole of emerging markets and India. Now, the second thing is potentially even more important than that. I think we will see some defaults on foreign currency debt by emerging markets in 2017. We're all guilty of looking at what's happening today and extrapolating it, but Turkey is clearly a country that's in trouble and may do that. Now, the reason that that's important is it changes people's perceptions of emerging markets. We've been here before. We've seen it happen in 1998. We saw it happen in 1982. The whole risk profile for emerging market changes. And it's what I've been trying to stress as we've been talking. It actually creates an opportunity for India to show that it is going in a very different direction. There is a foreign currency debt burden in India, but it's not too onerous. And to the extent that India can stand out from the pack and go a different direction, really a wonderful opportunity. So it's a tough year for everybody in emerging markets, but actually a year for India to break away from the pack in terms of its ability to attract capital and persuade foreign investors that it remains on track for what was promised by the Prime Minister prior to his election.
Okay. How do you see the dollar panning itself? Does it get even much stronger than current levels, 10-15% stronger than current levels? And if that happens, then will there be rate hikes from the Fed?
Yeah, it's a great question, and I think we have to say this is a bull market for the dollar. We've only had really two bull markets for the dollar since the end of the Bretton Woods Agreement, and therefore it is probably only 1/3 done. Now, the difficult bit would be me telling you when it completes the bull market, but there's 30 to 40% potentially more to go, which sounds outrageous, but that is still to come, and it's going to put the world into a very difficult situation. And your second question is obviously an extremely good question, given that just how aggressive can the Federal Reserve be on raising interest rates? And the answer is probably not particularly aggressive, because the rise in the dollar will do quite a bit of the work for them. But the real burden of a strong dollar falls not upon the United States of America, but falls upon the rest of the world. Difficult year for the rest of the world, but a good time for India to pursue policies in this budget which differentiate it from other places.
Okay. A final question on the global environment. Considering that you expect a strong dollar, will this commodity upcycle continue? We saw it first in crude, but actually metals have been rising without battling an eyelid.
No, the rise in commodity prices will not continue. It's been surprising, of course, that it's gone on against the background of a strong dollar, which is not typical in the first place. But the strong dollar is likely to bring down global growth. That's the key issue here. If we look back through the previous strong dollar movements, which were in the early 1980s and then in the mid-1990s, it inevitably brought a crack in commodity prices. And I think this one brings a crack in commodity prices as well.
Okay. Well, finally, Mr. Napier, which is your favourite emerging market at this point in time? And within India itself, what would you look for in terms of growth stories?
Well, in terms of all the emerging markets, I'm not a bull in any of those emerging markets at the minute. I mean, there's just nothing in the history books that tells you you're going to make money in emerging markets in a period of a strong dollar. If you had to pick the least bad, I have been a long-term fan of investing in or picking out the Indian market as being better, but I really don't believe that's going to give you positive returns in dollars and probably not even positive returns in rupee, given what's going on there.
Okay. Any specific story you would look for in India? I mean, we had the infotech story, technology companies as one big India story. Then there were the pharmaceutical companies. Now, of course, a lot of them are being researched by the US drug authorities and other authorities. Then, of course, there are the domestic banks, finance companies, which would be, given the cycle the country is in, your best bet or your better bets.
Yeah, I mean, it's very difficult for someone who writes top-down to start picking stocks. But if India follows the right path, then it's clearly, to me, the exciting bit is the financial system outside the state system. That is where India is radically different from China. It has this private sector financial system, which has all the appearances of being a good financial system, a well-run financial system, and a stable financial system. And clearly, if the state continues to back away from being involved in all of these businesses, there are tremendous growth opportunities as they take over from the state financial system. But that is very much a long-term view on the prospects for India, and really will have nothing to do with the next 12 months.
So what's the one thing you would look forward to from the budget?
Stability, and a clear sign that the rule of law is becoming more important than the rule of man, which is a path that India has been on, albeit a volatile path, since 1991. And you might say, well, that's always an important thing to do, but this would be a tremendously important year to do it. And that, I think, could have huge positive implications in a very difficult year for India to get more than its fair share of global savings and global capital inflows. And the pace at which India can continue to change, really, given its lack of domestic savings, will depend a lot on its ability to do that. So the budget can really make huge strides in that. And I'm fingers crossed that that is exactly what will be delivered.
Right, let's see if that advice is taken. Thank you very much, Mr. Napier, for joining us with your views and kick-starting our series, What the World Wants from India. Thank you, Mr. Napier.